Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. I'm Michael Boutros, and today is Tuesday, September 29th. So, we don't have much data on tap today. We do get the Case and Shiller home price index at 9, but not really much on tap. Obviously, the main highlight for the week is going to be Friday's non-farm payroll report, closing out September trade tomorrow, starting off October trade on Thursday, and a lot of these pairs are at some major critical points. So we'll go over the last couple of setups from yesterday's intraday update. We went over some critical trades yesterday on DailyFX as well. I know there was a lot of questions. I got a couple of emails from you guys in overnight trade. More than happy to go back and review any of those if you'd like as well. But we've got quite a list to get through here, so we're just going to get started. As always, questions, trade setups, specifics about the strategy, guys, do feel free to throw them on the message board. A quick update on IDO. Excuse me. We're still working out some of those kinks, guys, so we're going to keep the beta version up for another week or so until we go with the live launch. Again, everyone who's a current subscriber heading into that launch next week, most likely, is going to get grandfathered in, so you'll have access to the IDO search engine for the life of your account. One other quick update, guys. Tomorrow's scalp webinar is going to have to be canceled. We'll be back on Thursday. Something came up, and I actually have to be away from the office here. So no strategy webinar tomorrow, but Jamie's going to be on tap regular time at 1 p.m. Mario says, hi, good morning, Permendra. Great to see you guys. Merdad, excuse me, I keep mispronouncing your name. Always a pleasure to see you as well. All right, so quick relative performance on the dollar looks like this so far on the session. You got the Kiwi up 0.43%. We were looking for a Kiwi drop into support to possibly take a long. Didn't quite get the drop all the way into support. We'll go over that in a moment. And you saw that rally in overnight trade really take into key resistance right now, the upper median line parallel. Biggest loser on the session, oddly enough, is the euro. We made a run into resistance, even probed through it, and then we turned around on that front as well. So we'll take a look at those first two scalps, and then we'll jump into some of the pairs that we had on the radar last night. So here's what Kiwi looked like going into, well, before I jump into this, guys, sorry. Here's the dollar index looks like. I posted a piece on DailyFX with this yesterday after the webinar. It's also on the radar charts last night. You know, the weekly opening range is set and clean, okay? And you're basically looking at 12,087 as the high, 1248, a basic 236 off the low, and also the median line for the formation here, just off the last highs that we made last week, caught the lows yesterday. So essentially heading into non-farm payrolls, if we hold this level, if we hold this range, should give us a really clean break, or at least a very clean directional bias heading into the start of October trade. If you look at this on the daily for the index, the same levels that we've been looking at are the same levels that remain in view here. So 12,071, we've kind of been dilly-dallying through it. That's the reversal day close subsequent to the high for the year, okay? And we still have yet to make a close above it. So last 2 days we've been trying to probe through, unable to do that. So the close above 1271 will be the first tell if this thing is going to break out. From a stretch or just an intraday standpoint, you're still looking at resistance at the upper median line parallel. This is proposed. You don't really know if this is in play yet. It's too soon to tell. But you also have the stretch highs, the opening range high for the month, which is still preserved, and that's right around 12,095. So the levels are pretty clean. The weekly opening range taking shape just below resistance. 12,087 is going to be the near-term bearish invalidation level. All right, so now that we have sort of a clean gauge of what, or at least the range we should be eyeing for the dollar index. Remember, at its inception, euro, Aussie, sterling, yen, just the four most liquid, most traded currencies. Take a look at the momentum indicator here on the intraday, also holding 60-40, 60-40. You know, it's a flat to ranging market. So we'll look for a range break out of that key threshold for the dollar index. But moving right along to the Kiwi, Eileen says, sorry, I'm late. Good morning. Always a pleasure to see you here, Eileen. Cheers. Here's what the Kiwi look like. If this proposed pitchfork is in play, remember, we've been broadly speaking about the Kiwi all month long, holding a very obvious and well-defined opening range for the month as well. We never broke. So in fact, we're waiting for a move beyond that. But within that range, if this median line formation is in play, you'd expect to find support ahead of 62.70. Okay, what's 62.70? Very simple. It's that low day close for the month. All right. It also coincides with basic median line parallel support. So if we get a pull into that region, the idea was to look for long triggers down there. You didn't quite get the extension pull all the way down. In fact, you barely made it below 63, and then this thing reversed course. Here's what Kiwi looks like now. First on the daily. Okay. No change to any of those levels. And on the 30. So you can see a slight probe below that region. I was actually on the short side here earlier in the day yesterday. On that pullback, the trailing stop got pulled out. We only pulled out about 15 pips on it, so didn't quite get the efficacy on that. As a disclaimer, I'm holding short off this level right now, right off 63.58 rather, with initial target just down at 63.36 first, and then down into what's the limit at? 63.30 is the first initial target. Excuse me. Keep in mind, momentum right here is at 60. You got the convergence of a basic median line parallel off the highs, okay, and a 618 retracement just of the range for this week so far. So it might be worth a couple of pips to the downside. Remember, on this trade, guys, you're only looking for about 22 pips per scalp. So keep that in mind. And we'll see if how that pans out here throughout the course of the session. Mark Haverman says the 100% extension also coincides with that 50 you have there. $64.51. 451. Oh, you mean an extension off the low here? Right. Yeah. That would be a decent play. The only thing with this, Mark, is that I typically will wait to get a little validation that the upside bias is actually confirmed. This is a great extension. I'm going to give it to you. When the highs line up with a major high or a swing high or a monthly high like that, they tend to be really nice plays. But typically, I wouldn't really start to really or derive these targets until we break out of the formation that we're in. That being said, you're absolutely right. Even more validation to that key region, right? And remember, that's actually, again, it's just the opening range, well, a little bit beyond, but the opening range high for the week. If we break through this median line, the formation or the validation for the breakout, I think, is going to be there for the Kiwi finally. So remember, there's a couple of reasons. We're not trying to fight the downtrend here. We're intraday, right? Mark says, yes, agreed. Right on, Mark. But there's a couple of reasons to suggest that you want to be wary, especially if you're a longer-term guy, guys, and you're still holding shorts on Kiwi. Just look at the daily chart. You know, we've been putting in some pretty radical divergence on these lows, new lows, higher low, higher low, higher low. And it suggests that downside momentum is waning. In fact, interestingly enough, on that reversal day, that massive day on the 24th of August, which everyone remembers, when markets took a ridiculous spill, look where that low found support. Right at the median line formation that had held prices for over 4 months, almost 5 months. We broke out of it, tested the upper as support, came back. On the massive spill, the median line still held as support. And that actually completed an exact 1618 extension. So ever since then, you've still been getting that ongoing divergence. Could be up for a nice rally here in the Kiwi. We'll have to see, but not out of the woods just yet. So we'll see how this pans out. This is, by the way, the bearish invalidation level. Okay, so if we do see a topside break beyond this, you'll be looking for targets all the way up into that 64 handle. Obviously, like Mark noted earlier, that nice confluence at 64.50 is going to line up very nicely with the range highs for the month. Any questions on Kiwi? You're at resistance. You could get a pullback from here, but we're broadly looking to see if we can get a break to the upside as we continue to hold support. All right. So we'll continue to track this one intraday and give you updates on it. One of the only pairs that I really like as far as trying to play a topside break. We'll take a look at the other dollar crosses. Obviously, all the dollar trades, guys, are on the menu this week. Okay, heading into non-farm payroll, biggest market mover is going to be this month. You know, there's no FOMC interest rate decision, so until later in the month, rather. So this is going to be central focus for the next couple of weeks. We've continued to hear the Fed remain really upbeat on the fact that they're going to be able to raise these rates. Some data came out recently suggesting that inflation expectations also have continued to fall off, guys. And that's the second of the dual mandate. That's really the issue for the Fed. So if inflation expectations continue to fall off, that's going to be even harder for them, regardless of what the labor markets are doing. So just put things in perspective there. The other setup from last night was Euro Oz. And as we were publishing this, we had just broken the 1618 extension. Who was I chatting with? Mark McDowell, if you're in the room. It actually pulled even higher on Euro Oz, and it did go into the high day close before reversing course. So here's what a Euro Oz looked like last night. And here's what it looked like, and here's what it looks like now. So at the end of the day, this was one of those setups that was pure and simple if you were there to catch the break. All the upside targets got taken out into 62.24, which is the high day close for the year. And the basic premise, if you guys remember the previous scalp from Sunday night, was look for a break of 60.11 into 58.94. Okay, at a real clean weekly opening range. You're basically looking for a break above the median line to continue the favor of the upside, or a more steeper pullback towards the median line parallel to get back on the longs. So you didn't get an opportunity to take the long on a pull of support. There was the break. And in fact, that break happened on a break of the US opening range. So here's a US open, you set a low, you tested the high and pulled back. About 10:30, it broke right through the high and closed. That's your validation, not necessarily your trigger. But even from a momentum standpoint, this is what I was trying to point out to you yesterday, Mark. You saw momentum break 60 for the first time this week. So that in and of itself for me was enough to start looking for pullbacks to get in on the long side. Again, target set from Sunday's report. I got all taken out to the high day close. This is a critical resistance. Let me just zoom this out a little bit. Near term that we're at. So this completes 100% extension off of the lows subsequent to the high for the year. And the high day close, which is 62.25, 62.24. Okay, so could get some pullback from here. Some Aussie strength certainly is going to help this out even more if we start to get the Aussie moving off support. But the trade remains broadly constructive above the weekly opening range low, which over the next few hours here is going to coincide very nicely with that lower median line parallel. All right, so the immediate risk here still is for a pull lower, but we're looking for long triggers, broadly speaking, on Euro Oz heading into U.S. trade. Bear with me one sec here. I just want to see if we have any. Okay, let's do this real quick. So we're going to adjust these levels just for a moment. So the retracement off the highs that we marked in yesterday's report, obviously we took out that high. So that retracement is no longer going to be the focus level that we want to use. So we're going to go ahead and dump that, take a retracement off the low. We'll clean that up, and the 618 comes in a little bit better with the initial opening range high on this mark. So we'll go ahead and clean that. 236 offer to pivot, 38.2 we don't need, 0 we don't need. And the 50 we don't, okay. So these are sort of the amended targets I would focus on at this point. And that adds defense. Okay. Yeah, look for support right here about 160. Momentum is at 60 as well. We'll see if that holds. But if the breakdown continues, obviously, if we look at the euro dollar, just take a quick analog here for what's going on in the euro crosses in general, that's right at support. So this is a basic trend line formation or median line formation off last week's lows, sort of what I started the week looking at. You saw a quick break there, but here's the recovery, and here's another move. If we mirror that slope and take a sliding parallel off the weekly low, it shows that we're at support right now. Remember, for the euro, this is really, I mean, when we started the week, this is really the focus that I was on. Didn't put out anything on SB just because it's such a critical range. I think you kind of want to let this resolve first before you start to mess with it. If you look at momentum, we've continued to contract. And the trendline resistance that you're looking at here, okay, off the 2014, what was that, May high, that's coming into focus again, which we pivot off of multiple times. The current operative upper median line parallel is there, and you have a clear trigger and momentum as far as the upside is concerned. So for the euro, watch for a resolution of this really tight range above that 200-day moving average. So if we look at the euro scalp again, it's going to be a critical region. 1208 is the level you want to keep in view. Again, real quick to go back to the daily, that's the monthly open. So if we hold 1208 as support after a break, you saw this break. I was looking for a hold here to possibly look for some long triggers. We didn't get any. So we'll continue to see what happens into US trade. But if we push back below this, guys, and specifically if we close the day below it, you know, look for continuation of further downside support here, or further downside moves in the euro. So puts things in perspective, right, guys, for the euro Oz on where we're looking to play that trade. Any questions on either of those from yesterday? So technically, the long side got invalidated with this break. We'll be looking to see if that opening range holds into the start of US trade. The other setups, so that's Kiwi and EuroAuz. The other setups from last night, and one I was involved in was the Euro CAD. Euro Yen is also looking pretty beautiful. So let's take a look there. Oh, Mark says, I'm learning from the best. Cheers, Mark. Always good to have you in the room, brother. All right. EuroAuz, or Euro Yen rather, excuse me. Okay, so a quick look at the Euro Yen on the daily chart shows that major key support that we probed through earlier in the month. On the daily, it's a little bit bigger. It's from 33.56 into like 33.10. But on the intraday, I'll show you, it's a little bit clearer. The only thing that we want to note here is a quick rebound off of this major key pivot in price, which has essentially lasted since the May low. And then a rebound off of, or a rejection of, that 200-day moving average, which has also served as a pretty clear-cut pivot in price. So the focus range is on a resolution of this region with a break above 35.87, which again is the monthly open, needed to put the longs back into play. Here's what euro yen looks like on the intraday. So the only thing we want to highlight here is that the weekly opening range is taking shape just below resistance, and resistance comes in just ahead of 135. 134.96 was the stretch high for the weekly opening range. And you have that upper median line parallel, which has been holding price for a couple of weeks now very nicely off the highs. So right off the bat, you start to look for short triggers as you come into that 135 handle. Again, wasn't around to really catch this one at 4 o'clock this morning, but really nice opportunity with that quick run, quick failure ahead of 60 there in momentum. And obviously here we are completing a basic 618 of the advance. So we're in the trend until we're not. I hate using cliches, but as long as we're holding within the confines of this descending channel, you're looking for short triggers. It's very simple. Try to simplify things as much as possible. I know sometimes the setups might seem way more complex, guys. I try to break it down as simple as possible, but if you're around for European trade, that was a clear-cut scalp setup. Mario says, was there a short trigger from 134.86? Let's take a look. On euro yen, let's see, 486. Remember, you're always looking for the low in price. That would have been the trigger on the 5-minute. 76, the high was 96, which would have been tight as far as a risk to reward. It still would have been a great entry, but would have been tight on a risk to reward basis. If you take it to a 1, I'm sure the trigger might be even clearer. Well, this would have been the initial one to work with. And on a trigger like this, a lot of times what you want to do is you want to wait for the break, and then you want to look for this retest as resistance and a move lower. If you had done that, and that's why a lot of times, and recently I've been telling you guys, keep an eye on that intraday 1 minute. I know, we don't want to be too granular in getting too tight in on the trades, or on the time frames, just because you can lose focus of what the broader trade is doing. But in market conditions like these, I think it warrants it. So you saw the initial spill there on the trigger, came back, give you a much better risk to reward. Resistance held, or it couldn't even probe through it. The 50 break here sort of validates the trigger break. So it wasn't the most compelling trigger, Mario, but just from where you are, don't forget, guys, I want to take a step back here. Triggers and momentum and any oscillator are only a tool. Any oscillator you look at is super backwards looking. Okay, they're not telling you what's going to happen. They've told you what's happened. So all you're looking for is a clue, another tell that what your assessment in price is correct. So we highlighted last night, hey, look, this is the opening range high for the week. This is the upper median line parallel. Nice convergence, right? We're in a downtrend. If you find resistance there, or if price reaches there, inherently we would be looking lower, right? So we're just looking for that trigger to give us, okay, go ahead and click, right? So on a trade like that, I'd be, fine taking a trigger that's not as compelling as this. And why I say it's not so compelling is because with any trend line, the more tags you have with the trend line, the more validation it has. So a trend line that has a 4-point touch or a 3-point touch will always be better than any 2 points, right? 2 points is speculative, 3 points is confirmed. So not the most compelling trigger, but from a risk to reward, you're working with a great level. And remember, you're only looking for about 34 pips on this, so you had ample room on this 60 pip drop here to take profits. Okay, now at this point, we've rejected 60 on the long side. We've rejected 40, or it looks like into the open of US trade, we're holding 40 on support. So it adds further conviction. Watch for a break of the weekly opening range to give us that directional bias heading into the end of the week. Eileen, you were in the room last week. You were asking about those corrective slopes in euro yen, remember? And how were able to identify this slope earlier in the year, which worked out on so many different corrections. And what I mean by worked out is it just validates the completion of the correction. So on the pull off the June highs, once we broke that, you saw us test a high again. On the correction until early July, once we broke that, you saw the rally again, and so forth. If you take that same slope off this high, it's starting to lose efficacy, okay? But what I just want to show you on this is if this is a break, here's checked support. Okay, so near term, momentum's at 60, you're at support. If we break back below that operative slope, which is defined so many corrections earlier, it would put us back on course. If this holds, the break of the weekly opening range high adds further validation. And the levels are unchanged. You're looking for a topside break if we do get it at 135.50, 135.87, and then, or excuse me, 135.80, 87, 87. If we go back to the daily, is the monthly open. All right. So again, pretty compelling levels here for the euro yen. I wish I was there to see this one, but looks pretty good. Eileen says yes. Does that make sense, Eileen? Again, I don't want to stress this line, but adds again conviction that we should be looking for some near-term support here. And in fact, that was actually a beautiful trigger we just missed. Divergence into a trigger break. Take that 9 times out of 10. Damn, that was like 2 minutes into our webinar. It's okay. Market would always offer more opportunities. Any questions on euro yen before we move off? Eileen says better, yes. All right. Yeah, keep the questions coming, guys. If you have any strategy questions or specifics about the intraday approach, definitely feel free. Listen, we're really swamped on the administrative side here as we get ready for the idle launch. But once everything's in smooth sailing, guys, we're going to have specific webinars on just how to not really market based on current market conditions, but just more educational, okay, to get through some of your questions. And obviously, as new members on board, there's always a lot of questions on specifics for the strategy. So we'll definitely take the time to record one of those. Next up on tap, EuroCAD. As we continue with our Euro-themed intraday update from yesterday, EuroCAD looked like this. Okay. So, not a really compelling chart on the daily. There's not really much to look at here except for the fact that, again, the monthly opening range essentially never got validated. The 60 level in momentum couldn't get broken, but we certainly made a compelling break of the initial weekly opening range yesterday. And that took us right back into the highs for the month. And here we are with a quick failure after trying to break through those highs. The only thing that matters for EuroCAD, in my opinion, is what the intraday looks like. And here's what that chart looks like. All right. So, well, let me zoom out so you can see it like what it looked like yesterday. So, for those of you who were here last week, you remember that we were discussing this critical region, a basic trendline support dating back to the April low of last year, or of this year, excuse me, and basic median line parallel off that same low. Both of those regions converged right on 47.50 last week. Add to that that region also was defined by basic 100% extension off the high, classic correction. So we saw that rebound at basic trendline support dating back to the monthly high from that point, gave us a clear-cut definitive topside bias as we ran right back into the 50% retracement, 50.80, and then we closed the week essentially unchanged in EuroCAD. To start off this week, a basic 618 retracement off that low or off the range from last week was the opening range low for this week. And coming into Monday's trade in US, you're looking for a basic break either above 149.50 or below 148.70. Topside break was accompanied with a move above 16 momentum, and you're off to the races. Here we are failing yet again at the highs. Very high probability, guys, that this kind of goes range bound or sideways for quite some time. So I'm still not really too excited. I would rather be on the long side of the trade. So on a pullback back into 48.70, specifically if it comes, in time with the convergence like it did here along that lower median line parallel. So that's looking basically into tomorrow's trade session during US into Asia, especially if we get a pull into this region, might offer a real nice position, both with a quick stop against the Friday low, or if it breaks, you'd be looking to shift the bias to the downside, looking to sell rallies. But this is the bullish invalidation level. All right. While above this region, you're really looking to buy pullbacks. Wouldn't be looking to target anything outside the monthly range, though. Meaning, if you're on the long side of the trade, start to clean that up as you head into 51. Key resistance is really 52. Okay, and these are my favorite confluences. I think we talked about this last week. A 618 retracement off the high and a basic 100% equal leg extension off the low. Gives you a range of 151.90 into the 152.03. So that's sort of the key objective hurdle we need to get through on EuroCAD. If we take a quick segue and see what the dollar CAD is doing, this thing is not even worth intraday trading, in my humble opinion. If you guys recall, I was talking about this in the webinar yesterday on Daily FX. I was holding a short right into the open of the week. There was a very compelling, well, not too compelling, but there was a pretty compelling trigger here that had lasted like 4 days, and it faked me out. On the break, it was a tight stop. Your stop was right against 133.47. If you get the break, great. You're at an awesome position. If not, it's a clear-cut invalidation level. So we broke right through, tested it as support, and here we go with an objective target up at 34.58, 34.60. If you remember that, it's the key 618 retracement, long dated. And it also confluences with the basic trendline resistance from the February highs. So key region of resistance, a little bit higher for dollar CAD, but a little bit higher for dollar CAD is some CAD weakness. With what we're seeing today in the Aussie, not surprised if we get some back and forth chop action here with Euro, or with what we're seeing in Euro rather. Not surprised if we get some chop and back and forth here with the Euro CAD. So you got the trigger, possibly look for a break lower, look and see if we can buy dips in that pullback. Bullish invalidation 48.70. Eileen says, looking forward to those EDU recordings. Great idea. Do you find the same end of month flows problems and false triggers happen in the non-dollar pairs tomorrow as the 30th? Yeah, that's across the board, Eileen. And I don't want to stress it too much, but for me, it just hasn't been the best performance for my personal trading over the years. Unless you're in a decent position, guys, and you're already floating a gain, as you get into the last day of the month, the first day of the following month, I tend to just ease off. Look, if the setup is there and the triggers are there, and we're up against resistance, a short trigger comes up, no problem, right? But maybe, Eileen, instead of X leverage, I'll use 1/4 of X. It's just a time to be cautious. It's just a time to be cautious. You know what I mean? I don't want to necessarily hold you off from taking positions, but not the time you want to press a trade. Let's say that. Eileen says, you've trained me to be cautious. You're more than welcome. I mean, caution pays. In this kind of leveraged asset, it's not a game, and we got to make sure capital preservation is paramount in everything that we do. Everything that we do. Mark says Euro Oz right now. What's up with Euro Oz? Mark, I'm not sure I got your question there, what you're looking for. All right, actually, yes, divergence into a trigger break. On the 1 minute, you haven't gotten it yet, but looks like you could. Wait, see that candle close here. Is that the 618? It is the 618. This is almost good enough at this level. Yeah, it looks pretty decent. Again, divergence into a trigger break, guys. These are my favorite types of triggers. We got them on both sides. We'll look to see if this gets us a nice entry as we get into U.S. session. Not quite there yet, Mark, but we'll keep an eye on it. All right. Mark says premature trade syndrome happens all the time. Happens to the best of us at times, man. Don't take it. Don't be too hard on yourself. Craig, great to see you in the room. Says sorry, came late. Michael, did you cover the Kiwi yet? Yeah, we did. Let me go back to that in just a second, Craig, and you know that this is going to get archived. So that's a long trigger right there in the Euro Oz. So see if we can get it pull back a little bit here. We'll jump right in. Oh, it's giving us that run. Okay, we missed the trigger, so I'm not going to jump in there. It looks like you weren't too premature on it, but wait for the pullback here, guys. Don't start chasing it just yet. Stops need to be against the lows. You're looking for about what is this? Actually, no. Euro Oz has the wide range, 61 pip ATR. So if we pull back here, it'll be worth it to try maybe taking a near-term scalp. Your initial targets wouldn't be too far up. Remember, it's Euro Oz, so it's got quite a range as far as the intraday ATR is concerned. Remember, come back, test that trigger as support. Will oftentimes be a much better opportunity to get back in if we get it. If not, there's going to be more opportunities in the start of trade, guys. We wouldn't want to get too concerned over it. Oops. And keep that there for you so we don't miss it. Cameron saying Euro dollar long order was issued yesterday at 111.86 with a stop at 111.40. Is that still in play? I think. Yeah, absolutely. Why wouldn't it be, Cameron? Again, from the swing side of things, I want to default all those questions to Jamie, just because I'm not necessarily in those positions with you guys. But yeah, I mean, even from my standpoint, we started off the webinar saying, look, this thing's right at support. So we'll keep an eye on this as we start the U.S. trade session. This is the near-term picture. We went over this earlier. Just a basic sliding parallel off the low. And really nice reaction. 1208 is what I want to see cleared. Okay, it's really important that we get back on the upside of that because that's the monthly open. Okay, and it's been a clear pivot in price. So if we're going to find some support in euro dollar, this is where I'd expect to see the initial support, start to show. Does that make sense? Eileen says, always love these happening right now comments about what to do with the trades, wait for the pullback, etc. while something is running. I mean, look, I'm not gonna lie to you. Sometimes when you're trading, guys, you got to act quick. And if the market starts to run, as long as the threshold for risk is within your tolerance, sometimes it's a Hail Mary. But that's not something I'm going to promote here in the webinars, right? Um, Really, everything needs to be based on your risk threshold on every trade. And if the risk reward doesn't make sense, it's not there. Now on this trade, you have a 60 pip nearly ATR as a quarter of the daily range on Euro. It's massive compared to what you're looking at on the dollar crosses. So it might be worth it on a trade like this to open up your stops a little bit. It's just from where we are in a time standpoint. I'd rather either get a really good entry or watch that U.S. opening range give me a trade. So I hope that offers some flavor, some color to that, Eileen. Cameron says, yes, thanks. You're more than welcome, Cameron. Last but not least, well, rather, the Euro CAD. Any other questions on the Euro CAD setup? So on that front, similar setup here. Now you're testing that 618. We're going to get rid of this. Working the new retracement to reflect the high that we made in overnight trade. Bear with me one sec, guys. I just want to see what this retracement yields. Yeah, so you have a little overlay. 49.77, 49.73, and we'll leave that on there. Something like that. Be a little bit more of a compelling near-term levels here for the EuroCAD. The invalidation level is still going to be the weekly opening range low. Yes, it's as long as this is in play, guys, pretty clear, nice setup as far as the trend. Hamid says, Eileen says, offers great color. I appreciate that, Eileen. You're more than welcome. Hamid says, can you please explain a bit more about Fibonacci retracements? I know about the strategy, but would like to hear how you use them. Thanks. So, Hamid, Fibonacci can be a topic of a webinar all in and of itself. I could go on for a whole hour about Fibonacci. All you want to do is recognize the difference between the extension and the retracement and when to use them. It's anytime you make an extended play or there's a swing in price, you're using the retracement to find where the pullback may likely find support. In the Fibonacci sequence, 618 is the golden ratio. All the Fibonacci sequence is, guys, is 1 plus 1 is 2, 2 plus 1 is 3, 2 plus 3 is 5, 5 plus 3 is 8, and if you take the sum of every one of those numbers, that gives you the Fibonacci sequence. The ratio between them, once you get far past the first couple of numbers, is a constant steady 618. So that's where it derived from. The concept of Fibonacci actually derives way back to Indian literature centuries and centuries ago. You can find it everywhere in nature, in star formations, and the leaflets on a tree, spiral formations of seashells. It's actually a natural occurrence that happens anywhere in the universe. If applied to financial markets, you can see that price also tends to follow these types of patterns, these types of ratios. So we look for the Fibonacci ratios in between an extended play to give us where the market is likely to find some support, where we're likely to find a pivot in price, and we use them to target an intraday trade. So on a trade like this, for example, these are, like I said earlier, this is my favorite setup, 100% extension. So if you take this leg here, you're extrapolating where you're likely to find resistance. So an extension is used in trending markets. Retracements are used more so in pullbacks or in ranging flat markets. When you see an overlay like this or convergence, those tend to be much, much more critical levels. So Hamid, again, there's actually a lot of stuff that I've done on daily effects on Fibonacci, videos on YouTube if you want to take a look. But I hope that gives you a quick overview of Fibonacci. Either way, there's tons of resources for Fibonacci. I don't think you want to stress all that information, Hamid. All you want to do is kind of use the application of how to trade with it. Don't mind yourself with necessarily all the technicals about it. I hope that helps. So yeah, looks like we missed that little run there. It looks like, Mark, you didn't have premature trading syndrome, my friend. We were right uh, on that trigger break there. Even the 1 minute missed it a little bit. He says, thank you for your explanation. I appreciate that, Hamid. Hope it helps. Again, it'll sink in with use. We'll, we go over these every day. All right, so those are the sort of highlighted setups that I'll be looking at for the next few days. As we get closer to NFPs, I actually will going to take my foot off the throttle for the dollar pairs until we get into Friday. That's when you're likely to see the fireworks, especially on a miss. If we miss NFPs, or if the number misses the mark, you're likely to see quite a bit of volatility. So as it stands right now, the expectation is 202. Okay, so as it stands right now, the expectation for non-farm payrolls is 202,000. Unemployment's widely expected to hold at 5.1%. And like I said yesterday, we'll be really interested to see what the labor force participation rate holds. That's at a 50-year low or something, more. 1970 was the last time. 1970s was the last time we saw participation that low. So we'll watch this number as the week progresses, rather. A lot of times you'll see the estimates start to change on the back of the ADP number, which comes out tomorrow. If there's a really strong ADP, sometimes you'll see an upward revision of non-farms. If there's a strong miss on ADP, sometimes you'll see this number revised lower. Bottom line, as long as we're within the 200 range, last month we saw 173, you're not likely to get any too much of a push in interest rate expectations. But if we do miss, the risk is definitely for people to start pushing out those rate expectations. Remember, the only solid thing they've had to stand on as far as trying to justify a rate hike is the unemployment. Inflation is still well below the 2% targeted rate. Eileen says all the good print releases are at the very end month and the very beginning of the other, right, Eileen? Well, I mean, you got FOMC and you got the non-farm payrolls here in the U.S. Again, events that we'll trade, don't get me wrong, they're at the opens, we'll trade them, but super nimble, guys. The reason I say be cautious is because a lot of the trades we've been taking, actually quite a majority of them, we take the initial position, then we phase out. So as you hit the initial target, we'll take off a little bit, bring the stops to break even. As you take the next target, take out a little bit more, bring the stops up even more, lock in the previous range, and so forth. So when we're trading into the end of the month at major releases of news, things of this nature, for me, it's all in, all out. I mean, maybe I'll leave a quarter of the trade and see if it runs, but you get so much back and forth price action. If I'm up 30 pips and there's a 40 pip ATR, we're at resistance or we're at support, I'm just going to book the entire trade. So it's a little bit different of a style. You want to be super nimble. So just a quick run around the horn again. Dollar CAD we went over briefly. Gold prices with another big move here yesterday. Here's the intraday trade that we had last week. What can I say? Clearly broke the uptrend. Clearly broke that upper median line or lower median line parallel from the monthly lows. A slider was holding this thing up briefly yesterday before we finally broke through that. Near-term support at this point and key invalidation level for the broader turn to the upside is 1120. You had last week's low at 1121. So pretty big region of support. Again, if you zoom this out, you can kind of get some reference for where we are. If this slope is in fact defining price, that should be the last level that you see of major support before this thing really falls apart again. And it's here's what it looks like on the daily. Okay, keep things in perspective there. Update on the Euro Aussie trigger. Oh, let me bring that back. Okay, yeah, so you're going to have to wait for a new trigger, right, Cameron? We're not going to just jump right back into the trade. Let me see what the 30 looks like real quick again. Yeah, I don't really like that near term. Let's see. Yeah, there's nothing here necessarily for me yet. I'd still need to get some sort of momentum trigger. Um, Remember, on the hold here, and always keep a gauge back, guys. Just look back in price. On the gauge, even on this 1 minute chart, 40 break, turned ahead of 60. 30 break, turned ahead of 60. Yes, you're seeing some divergence. You did the trigger break, but that would have been the trade. Okay, you're looking for your 61 pips. You would have still been in, looking for that extension up towards basically the range highs for a New York trade. 60 holding in momentum and the turn break below 50, not something I'm going to try to fade again. So we'll wait to see. It's likely this thing will set up the U.S. opening range right on this support. And you'll either get that break to the upside, which would validate the turn. Near term, the momentum still looks bearish. And this would have been ended up being a break even scalp for us either way. Quick note, guys, I take a lot of break even scalps. I just want to throw it out there. If you've been getting frustrated because that's been getting hit in this type of market condition, it's to be expected. But I'd rather take a break even scalp, and even if it goes in my favor, great. I'll just look for reentry at a better rate if it comes back. But I've been pretty quick to pull in the stops. A lot of times it works against me, but risk tolerance is or risk management is the biggest thing in this type of near-term strategy. You don't want to get chopped up throughout the course of a day. So I need either a compelling long trigger or a really good entry at a level again to try to press the long side of this once more. Cameron, does that make sense? He says yes. All right. Right on. So yeah, you're more than welcome, man. I appreciate that. A quick look around the horn. We went over gold. Again, I just want to touch base real quick on what crude's doing. Something that we'll be watching, obviously, for the implications on dollar CAD, but also the same range that we talked about last week is in focus. I think I went over this yesterday on Daily Effects as well. 47.20 thereabouts over the next few days. It comes into a huge confluence region with not only the 38.2 of the yearly range, but also that long dated trendline resistance dating back into the 2014 June high. So those converge right at 47.20 tomorrow and the day after. Key support, confluence here, the 50% retracement, 236, and just lower you have the opening range low for the month. So crude, don't do anything until the range breaks and we get a resolution. I mean, you can scalp the range, buying at support, selling at resistance, but heading into the month, heading into the event risk, you're going to want to respect and watch this key range break. I think you get it over the course of the next few days here at some point. Also, momentum completely flatlining. All right, so that's gold and oil. Dollar index we got out of the way. All right. Well, that finishes my checklist, guys. If there are no other questions from your end, we'll go ahead and wrap things up here. As we head into the U.S. trade session, things to focus on. Ready? You're basically looking for the dollar resistance today, whether we're going to see that high day close hold at 1271 on a close basis or not. Watching this upper median line parallel. Again, as far as the intraday chart is concerned for the dollar index, it's been very helpful for us, and we'll continue to see if this proposed pitchfork actually continues to guide price to the downside. Going through the dollar crosses, the Kiwi dollar, for anyone who just might have popped in late, looks like we're just breaking through that major resistance we just talked about. So I'm actually already out of that scalp that I opened the webinar holding. 63.58 is a 618 confluence with this descending upper median line parallel. That break really validates the continuation. You look for a run into the opening range high for the week, which comes in right at the median line. And the 764 retracement, that's the 64 handle. So at this point, now that we've gotten this break, guys, so long as we hold this into the US Open, you want to maintain a constructive bias above the upper median line parallel. And again, that coincides very nicely with 63.45. So look to buy pullbacks well above this region. Nice moves here. One more quick update about Euro Oz. I'm sure it'll give us a trigger at some point. There was the pullback, test of support, 60. I'm liking it. I'm liking it. Okay, you got 3 minutes into the U.S. Open, guys. Best of luck trading. We will pick things up again for the scalp webinars. We'll be back on Thursday. Tomorrow will be Mr. Setley's webinar at 1 p.m. Eastern, regularly scheduled time. So you guys are going to want to jump on that to get an update on the swing setups that he's been looking at. And heading into the non-farm payroll, we'll have some juicy stuff all ready for you on Thursday. Best of luck trading, guys. Eileen says, good multitasking, trading, and checking checklist. Good. Have a great Tuesday. See you again. It's trickier than it looks, Eileen, I'll tell you that much. A lot of times I miss positions I want to take, but it's all for the greater good. So I guess enjoy your day. Best of luck trading, and I will see you guys on Thursday morning. Cheers.